When you're buying a home, you need to get an appraisal. And the lender dictates that you must get an appraisal if you're borrowing money. Why is that? Well, number one, we need to make sure that the value of the home is in line with the purchase price. If we are lending you money for a $100,000 home, but the home is actually only worth $50,000, we're not going to want to lend you that money. So we want to make sure that the value is in line with the purchase price, and that's where an appraisal comes in. An appraiser is going to go and look at the property itself. They're going to look at comparable sales and determine what that value is. Now, what happens if the appraisal comes in low? If the appraisal comes in low, that triggers us to take another look and say, hey, we can't now lend you that money. Let's say that same example, $100,000 purchase price, the appraised value comes in at $80,000. Well, now we can only lend you based on that $80,000 value. So we're going to take $80,000. We're going to take whatever the minimum down payment needs to be, and that will determine what the minimum loan amount is, which means that we have a couple of paths forward. Number one, we can pay in cash the difference. If you absolutely love the house, you're head over heels, you can pay in cash the difference between the appraised value and the purchase price to make the seller whole and to make it so that we're happy with how much skin in the game you basically have on this property. And then number two is going to the seller and saying, hey, Mrs. Seller, the value came in here. I think the home is worth this based on what the appraiser said. And every other buyer is probably going to run into a similar issue. And so why don't you sell me the home for what it's worth, and hopefully we can meet somewhere in the middle. That's really going to vary based on market, right? Back in 2021, we saw all the time that happening, and sellers didn't care because there was more people in line trying to buy the house. Whereas when it's more of a buyer's market, sellers are a little bit more likely to play the game and come down. A lot of times what happens too is we'll meet somewhere in the middle. So we got a host of different things that we can do to overcome this low appraisal, but that is basically our options here. And most of the time you can have an opportunity to walk away if that client doesn't have the cash to put up, which, depending on how low it comes in, they probably won't, and still get their earnest money deposit back. Now, what if the appraisal comes in high? I have people ask me all the time, well, if the appraisal comes in high, is that a bad thing? Because now the value's higher and now, I'm going to pay more in taxes. And the answer is no. The appraisal report does not go to the county. The appraisal report has no bearing on what your property taxes are. What it means is you just hit the jackpot and you are walking into equity. And so you should be absolutely congratulating your clients anytime they are, and getting them excited anytime they get an appraisal that comes in even a few $1,000s over purchase price, because that tells you, hey, they're getting a good deal. So high, low, or right on, that is what the appraisal does to the process and what we need to do in the event of a low appraisal.